Welcome back. You're watching India Market Close, and the smile on the face is because at the end of the day you have to smile no matter what happens. Look at the Nifty right now. Let's just pull up the Nifty as we're going into that close. It's even worse. It's a 400-point downtake. I'm not sure what's happening. Is this the MSCI rebalancing?
Quite likely.
Is this a concern about monsoon? Tough to say. We'll ask that question to Deepak Chinoy, CEO of Capital Mine Mutual Fund, and Nilesh Jain of Centrum Broking, who are joining us on this leg of the show. But gentlemen, just stay on for another minute or so, because I just want to go across to Puneet for our bull versus bear section. And this is a segment where we take a stock and we give you both sides of the story. PG Electroplast seems like a good candidate for it today because it started low. Results were disappointing. They have decided not to give any guidance, but the stock is still 1% up. What are the two ways of looking at this stock, Puneet?
Well, that's right. It's one of those perfect candidates because there's a lot of commentary made by the management in yesterday's con call, as well as what brokerages make of it as well. So, as you rightly mentioned, profits down 55%, missed the FY26 guidance for both revenue and profits, and no guidance for FY27 as well. So that's the first bear case. But the management is expecting to target a better than industry growth in FY27. Now, for industry, FY26 was down 15%. PG Electroplast was up almost 5% odd at this point of time or so, but not too much in terms of what the expectation was. So that is the first key aspect to watch. The other aspect that will be negative for the company in FY27, that they are expecting the AC business to have lower margins in FY27. So FY25 margins were at 10.7, fell to 8.4, and now will consolidate at 8%. So that might be the other kicker, in terms of the profitability impact in FY27. But in the other aspect, the washing machine business, let's go across to the previous slide again, because the washing machine business is starting to take some pace now. So 52% growth in FY26, 30 to 35% expected in FY27 as well. But they will have to watch out for the margins, especially on commodity cost and forex. And that is the third key one, because inventory was one of the biggest issues for the company in FY26. You saw that 20% stock fall post quarter 2 results last year, and they've expected that 1600 crore inventory continues to be very high at the end of quarter 4, but the guidance is very, very strong here, and hence the bull versus bear candidate expecting it to fall to 900 crores by the end of quarter 1. So June end is what the expectation. It will be something to watch out for if they achieve it or no. And finally, in terms of compressors, big costing for the companies in AC makers. If they are able to do that, expectation is by Q4 of FY27 the plant comes on stream. But for this year, it will be a tough earnings. 16 to 18% estimates have already been cut in FY27. So this is more of a FY28 story, and hence an ideal bull versus bear candidate for today.
All right. Thanks so much, Puneet, for that and for laying those scenarios out for us. Deepak Chinoy, question to you. We're seeing the Nifty 50 at the low point of the day down 1.6, 1.7%. Is this the MSCI rejig? Does it present opportunities?
Well, I guess to some extent there is, possibly that, but I don't know the answer to that because the rupee is actually appreciating, and it doesn't look like they're taking money off the table. So it may be individual stocks that they may be moving. I don't believe that, if the rupee is appreciating at the same time that you're seeing such a damage in the index, that it could primarily be an index rebalance. It could be part of it, but, a steep fall that has happened in the last, say 1 hour or half an hour, maybe, some key players looking to, either exit their positions or something. It's the last trading day of the month. It's also a little surprising that this happens now. But yeah, if it is a rebalance, that could be one way of explaining it. But honestly, my simple answer is I don't know. I don't know if it is this or that.
I think that's fair and honest to say you don't know, because actually who can ever guess what's happening in its entirety? We can only guesstimate. But the facts are that crude is below 93, Brent nearly at 92. Rupee has appreciated, as you said, Deepak. Your results are not half bad, especially in the broader markets, right? The small and mid cap are doing fine. Yes, monsoon is weak, but is that enough to worry? Is this maybe another tranche of FI selling taking place because of the MSCI rebalancing, some NAV adjustments, you think, in the mutual fund space as well?
Usually mutual funds don't trade at the last, on the last day nowadays because, the TER requirements at the mutual fund level have ensured that we have to report annualized brokerage and transaction charges on a daily basis, right? So it's almost like if you do trade today, then your brokerage transaction charges of today will be annualized and assumed to be what you will be charging for the whole year. So you will find some mutual fund showing 40% or 50% TERs on a particular day. There's a BER, which people haven't yet gotten into. So the TER is a slightly different measure. So it's possible that most mutual funds don't even trade today. So to the extent that they would otherwise be supporting the market, maybe they're not there. So that might be one thing to look at. But I don't think it's an NAV rebalance thing at all. I mean, nobody would manually want to beat their NAV down at the last.
I know. It just seems, just wondering what's happening, because look at the India VIX as well. If you really want to pull up all of the indicators, if I look at Brent, what's happening globally at one end, that's fine. India VIX is about 8% up, 7.5% up. So there seems to be some real concern there. Deepak, this IMD prediction today, the second number that they put out, actually has brought down the monsoon rate from 92% to 90% for the season. That's a big concern, you think? Although that did happen in the morning. You needn't have seen this kind of huge 250-point drop in the last 10 minutes as a result of it.
Yeah, I mean, look, at some point, you see IMD predictions in the past. There have been years in which the early predictions have been 90%, and then they've gone back up to 95, 96 of long-term averages. I think this year, particularly given it's a super El Nino and there will be changes, I believe we might see some surprises in these estimates going forward, perhaps from too less to too much at some point. So I wouldn't pay that much credence to these numbers in terms of saying there's going to be a reduced agricultural output or that we don't have the logistics changes that will support some of these imbalances. But yeah, I mean, should this support a daily thing? I really don't know. It would have probably been selectively towards some companies and not the others. Not necessarily everyone suffers because of a bad monsoon. I don't know whether that has an impact. It does have a medium-term impact if it does affect agricultural output. But again, there I feel it's a little too early to call even now.
And let's remember that there is a significant portion of cropped area that is catered to by irrigation. And so therefore 55% of the gross cropped area, half of the net sown area. So there is a pretty substantial amount that is also taken care of by groundwater. I want to go to Nilesh. Nilesh, what do you make of the charts right now? Can you draw any conclusions from the intraday charts? And how do you position yourself at the end of the month, at the start of the new one?
Very good afternoon, Alex. Good afternoon, everyone. Well, Alex, in last couple of minutes of trade, a sharp drop that we have seen looks like mainly because of the MSCI rebalancing, because historically we have seen that happens between 3 to 315, and that's what we are witnessing right now. See, the closing is not very good. If at all Nifty closes below 23,680, that's the 50-day moving average, then that will be considered as a bad close. But not expecting any major sort of correction because there are multiple supports in place. The important support that is placed at 23,300, so that's a very important support to watch out for. If at all we see any further decline from here, I think that could be a good opportunity to buy, because we have seen the Nifty has been more sort of a range bound throughout the May series, and similar to what we can expect in the June series as well. So 24,000 is an important resistance, 23,300 is an important support. So that's the range which is still intact as of now. And the IVs once again have surged beyond 16, but on a broader scale, it is very much in the comfortable level to what we have seen earlier at the level of 20. So 16 is still a comfortable level. Bank Nifty, where we saw some bit of outperformance coming in today, but once again, we are witnessing some bit of selling pressure once again, and it is likely to end near about its 50-day as well as 21-day moving average. Both are placed exactly at 54,500. So from a closing perspective, both for Nifty and Bank Nifty is very important that they should defend their respective support from an intraday perspective.
Okay. Now, what is the MSCI? Just pull up that those lines on MSCI rebalancing, because various estimates on how much is the outflow for MSCI. 7 to 8,000 crores is part of it. So, is this huge outflow of money what we're seeing? And then my question is that, is this an opportunity then for domestic investors to come in? So, remember, India's weight in the MSCI standard index is not changed that much. It's from 12.4 to 12.3%, and those outflows are happening today. We have some of those inclusions, but that overall figure is estimated at 7 to 8,000 crore rupees. I'm wondering, Nilesh, is this is an adjustment more than anything else? It's because Indian markets are so vulnerable right now that you've seen this huge, nearly 400-point drop on the Nifty. Is this an opportunity to buy?
Well, Tamanna, absolutely, it's an opportunity, but I will not advise to jump and buy right now because you have a weekend ahead, right? So, better strategy would be to wait for a Monday opening and see the global markets as well. As of now, the global picture is looking stable. Brent crude is at comfortable level. Dollar index near about $99. USD and I have also cooled off from the highs of 96.96. So, and even if you see in the US market, which is trading at all-time highs, so the broader picture in the global market is not that worrisome as of now, looks stable. And if this is happening merely because of the MSCI rebalancing, I think that's an opportunity. And if you get Nifty towards 23,400, 23,300, I think that's a very good entry point in terms of start making investment from a fresh perspective. So better wait for some more time. Maybe on Monday morning you'll get a better picture. But I believe this is a very good opportunity.
Monday morning might be too late. You might get a better picture, but it might. Deepak, for anyone who's in the business of long-term investments, are you looking at these opportunities and finding them lip-smacking, or are you now feeling a little concerned about what happens next? Because think about it, for the first time, we are as close to a solution in the Strait of Hormuz than we've been in weeks. Brent, well, I'm not saying Brent is back below 90, but it's way off.
Yeah, long-term bullishness is a given here because I think India will do well in the longer term. However, these short-term imbalances will happen. We are supposed to get volatility in the market. These are markets. They're supposed to move 1-2%, randomly at any time. We just didn't get a period of a lot of this for a long time, but now it's more common. And I think that is what has perhaps surprised us. But in general, a 1% fall does not present a big opportunity. If you look at the numbers that you were looking at, there's a bank that was supposed to see 19x of its volume being sold today, let us say. But it's that bank was flat or almost up. So it's not even that, the flows because of this rebalance have caused this kind of damage. So it's difficult to predict what it was. But I generally feel that any drop in a stock that's forced selling, that might be an opportunity, and that's there in a lot of stocks even today. And in other cases, there are stocks that are perhaps finding the right valuations because maybe they were overvalued in the past and coming down. So the difference between those two will be the opportunities. So where you find that the prices are way below requirements, there will always be opportunities. There will be other opportunities to not hold a stock after, say, certain fundamental changes or results or commentary that you might have seen. Not much of a change because of a 1% fall. the market had fallen 5%, I might have a more reasonable answer.
I think if you look at it over the month, you might see a bigger number of fall, and you should pull up the monthly chart for the Nifty because it's been painful. But I get your point. Today is maybe just one additional big pop that we're seeing. Let's talk specifics. Indigo earnings are expected to come out post-market hours. Q4 is expected to reflect pressure on profitability despite modest top-line growth. Let me go across to Somit Sarkar, who's getting us that preview. Somit.
Well, yes, to be precise, 3 headwinds that the company had to take on in the fourth quarter of FY26, and pretty much weak set of numbers is what the street has been anticipating, though revenues up around 2% on a YOY basis. EBITDA is expected to fall by more than 70%, while the company is also expected to report a net loss of close to 2,300 crore rupees as against a net profit of close to 3,068 crore. But do remember that the base was quite high for Indigo because last year it was Mahakumbh, which led to good revenue growth and good yields, and hence you're seeing a decline on the yield front as well. Now yield is average fare per passenger per kilometer, that is expected to come down by around 2%. So what were the headwinds in the fourth quarter of FY26? Firstly, the international air traffic was impacted because of the Middle East war. Second was higher fuel prices on the international routes only, not on the domestic routes, but on the international routes, higher fuel prices had impacted the operations. And the third and the biggest culprit for Indigo in the fourth quarter was rupee depreciation. Alone because of rupee depreciation, the forex loss for the company is expected to be around 4,000 crore rupees. Now, because of this forex loss, the company is expected to report a net loss in the fourth quarter. Now, rupee depreciated by nearly 5.5% during the fourth quarter of FY26 from 89.9 to it depreciated to nearly 94.8, and that was the major reason why the numbers are expected to be weak. If you remove the forex loss, then the EBITDA is expected to be down by just 14%, which is actually not bad for Indigo in the fourth quarter. So the key thing to watch out for Indigo would be what is the forex loss that the company is reporting, how much of this is notional, and how much of this is actual loss that the company incurs. Apart from that, commentary coming in on pickup of air traffic, what is the impact of higher fuel surcharge that the company has imposed, or the net impact of higher fuel surcharge and higher fuel cost, and also what is the guidance that the company is giving for capacity addition for FY27 will be important.
If there is one company from whom we want to hear about what's happening now rather than what happened in Q4, I think it's Interglobe Aviation, just because of how the whole world and picture changed dramatically on crude prices. It happened in March, which will reflect in their earnings, but it just got worse subsequently. IT stocks are the only green bright spot in the markets today for several number of reasons. Emphasis unveiled its enterprise AI platform. Wipro expanded its ServiceNow partnership to scale agentic AI, and the street is betting on the next growth cycle. Puneet joining in with more details.
Well, thank you for that. So, as you rightly mentioned, Nifty IT continues to be at one of the top gaining sectors, and you're seeing these direct plays and the name that you mentioned, along with the indirect ones as well. So, the likes of E2E Networks, NetWeb Technologies, Blackbox, all of them gaining in trade today. So, the AI chips, data centers, all of those names continue to do well as well. I just want to quickly highlight 2 key updates. One has been on Emphasis, and we spoke about it with the management as well. Launched their own enterprise AI platform. And what they've said is that they believe that AI, has reset the industry at this point of time with the tech arbitrage versus the labor arbitrage argument now largely over. So it's the headcount addition and revenue growth era is now over according to the management. They've also said that enterprise AI has one of the biggest gaps where they want to place this new product in without human intervention and operate autonomously altogether. So that's what they launched today as well. And in terms of Wipro, their ADR jumped 18% yesterday on partnership with ServiceNow that has been expanded as well, as you rightly mentioned, and they will integrate their AI service platform with that of ServiceNow. So that's the second key update. And the third one on Anthropic, doesn't stop at $965 billion, and the revenue per employee, you can see the massive gap of $10 million for Anthropic versus $51,000 for the IT players. So these are all the key updates for today.
No, but then the point is Anthropic's update has got a NetWeb firing. Let's pull up NetWeb. The Nifty IT is also cooled off, decided to join the pity party on the markets. But NetWeb is 14% up because market is hungry. Find us some AI story. We'll jump.